Hello everyone, this is Ashish with Investor Friendly CPA. Here's a quick video on how to avoid hobby loss rule. Okay, basically if you have an activity and that always has a loss, then what government says is that you're not doing that for profit, it's just your hobby, and all the losses you have taken can be, you have to, they might disallow that, you might have to pay penalties, and going forward you cannot do that. And this usually happens when you have let's say you own an aircraft and you use it to personally, because there are a lot of tax savings when you buy an aircraft, right? Same thing with the property management entity. If you're in real estate and you do your own property management and you have a property management entity where you do a lot of retirement accounts and those kind of things, then sometimes this can also act like hobby loss. They have said that before. So how to avoid that is pretty simple. Obviously, some of the things you need to worry about. You need to carry the activity as a normal business. Make sure you have in a business-like manner, right? You're doing a good bookkeeping. You have a process in place. You have a website and everything. That really helps. And then make sure you're consulting with your CPAs and attorneys to create a business plan. Okay, you need to have that. Without that, it just looks like a hobby. So you're spending money to actually make sure this is viable. And the third one is how much effort you're putting into the activity. Okay, that matters, really matters. If you're just doing this for fun, or you're really out there, a few hours a day, or every single day, those things needs to be looked at. Now, I can tell you one big way you can save taxes through this without getting into hobby loss rule is this. Let's say you have a medical practice, right? And you make good money, and you want to buy an aircraft, and take all the depreciation and all the deductions. How can you convert this activity to not a hobby loss rule? Again, everything I just said, you need to focus on them, obviously. However, the other thing you can do is own this. Don't own this separately. Remember, if you have an entity that owns your, let's say, a luxury car, or and then that you use for business, or you own aircraft separately, same thing with property management, then what happens is, and you have always you have a loss, there's no income, then IRS is going to say, there's no profit motive. You're always making loss for the last 10 years. Where's the profit motive? You should close this business down. So to avoid that, if you own, let's say, an aircraft in a single member LLC, which is disregarded for tax, obviously, and then your S Corp owns that, then for the disregarded entity does not even exist for tax reasons, meaning when they look at the business activity, they look at the entire thing as one. So if your company, your practice is already making a lot of money, the activity from aircraft is already combined there, so the whole entity is making the money. So there's no hobby loss rule. One of the ways to avoid that. So just understand that. Same thing applies to any other businesses. You can get a single member LLC for the business that you are using that luxury vehicle, anything like in the same manner. I'm giving an aircraft example because that's pretty significant, right? People buy aircraft, they'll open a whole separate entity and try to lease back aircraft to your own company and use it personally and try to write off the vehicle, an asset. You can do that, but there's a hobby loss rule. What I'm saying is don't do that. Have it on a single member LLC, and it will really help prevent one of the hobby loss rule. Big thing is profit motive entity by entity. There's no entity if it's a single member LLC. Hopefully that makes sense, guys. Please follow us for more videos. Thank you.